In many ways, running a legal practice is like running a business. For a practice to thrive, solicitors need to understand and appreciate the importance of good financial management. In this program, Malcolm Heath, Legal Risk Manager at LawCover, and Anthony Etzine of AE Consulting discuss why poor financial management is a forerunner to professional negligence claims and what solicitors can do to minimise the likelihood of problems occurring while working towards a more profitable and successful law practice. Anthony, thanks very much for joining us.
Pleasure.
LawCover's claims data identifies the key causes of professional negligence claims made against law firms, arising mainly from poor communications between the solicitor and the client, poor systems and documentation procedures, and incorrect advice. They're the main areas. But since LawCover commenced a program over 10 years ago looking at firms with higher claims and going out to those firms, visiting the firms to interview the owners, a significant contributing factor to the cause of the claims has been identified as poor financial management. So today we're going to discuss why poor financial management is a forerunner to professional negligence claims, what are the factors that lead to this problem, and importantly, what solicitors can do to minimise the likelihood of this problem occurring, and better still, work towards a more profitable and successful law practice. It's ambitious. So Anthony, are you ready?
Yep, let's go.
All right. Let's discuss the legal profession firstly as a marketplace, the market, and then let's look at the changes, the trends, and some of the threats. So where do you want to start?
Well, it's interesting when you look at the statistics. The marketplace is, in my language, is very highly fragmented.
Yep.
What I mean by that is that 87% of all legal practices are sole owners or sole practitioners. Also, when you add the next tier up, which is really 2 to 4 owners, which is about 11%, that means 98% of all firms are very small practices.
Yeah.
That means that it's, when I say fragmented, it's a lot of people competing for the pool of fee-based or the fee-based income that happens to be there. The other thing that is interesting in the stats is that the number of solicitors in private practice since 2000 have virtually doubled.
Yeah.
Now, when you put all of that together, it's got to have some impact on their marketplace, particularly, in particular, competitive pressures.
Yeah, and so that's incredible, that, doubling of the solicitor population since 2000, it really is. And so the changes in the marketplace affecting law practices, what do you see them to have been?
Well, I've alluded to the first one already, which is the competitive pressures.
Yep.
You've got all those people competing for that pool, but they're also being impacted by non-legal firms coming into their space.
Yeah.
You'll also find that in-house legal of corporates and companies are doing a lot more work instead of farming it out to the practices. And similarly with government. When you have that level of people competing for that pool of income, it really means that the law firms they're going to be pricing pressures and they're going to have to sharpen their pencil.
Yeah, and with that pricing pressure, competition, the economies of scale, what about the pressure on technology improvements?
I think, well, it depends on what practice you're talking about. A lot of the firms that I went out to see are the very small firms. They do use some element of technology. However, even with that little amount of technology, a lot of them don't keep pace with it. With what it is. The larger firms will be talking about artificial intelligence and everything else, but that's not where 98% of the profession is currently at.
Yeah, there are important developments to understand and look within the current marketplace which solicitors practice in and appreciate how risk management can be best applied so it is actually good for their practice and their business. That is where we're looking at identifying opportunities, understanding the changes and the dynamics of the market, but looking at the consumer and government expectations and needs and how competitors are adapting as well. What is succeeding, what's not, and applying those factors to your own law practice.
In a marketplace that we have at the moment with the amount of competitive pressures, any sort of planning is going to be absolutely vital. We're talking about the financial side here, so even more so, good financial planning and good financial management is absolutely essential. My experience when I went out to the practices for LawCover is that this was, in many of the instances, lacking. there was a severe deficit of knowledge across a range of different things, not in all practices, but in quite a few of them. The sort of things I'm talking about is that there was poor understanding of, profit and loss, working capital management. Fundamentally, in a lot of the very small practices, not very aware of the business model used to generate profit. No benchmarking being used, whether internal or external. Interestingly, quite a few of them struggle to read financial statements, to just get the basic input from the financial documents that they were doing.
Yep.
And I felt that often led to an underinvestment in their practice. They didn't spend the sort of money they needed to do on training. You talked about IT early on. Maybe just simple stuff like upgrading their software programs, etc., were not being done. And underlying all of this, and probably it's a theme throughout everything I'm going to say today, their cash flow management generally was pretty ordinary.
Right, yeah, and critical to the practice. And you've visited many practices during your consultancy with LawCover and have provided solicitors with risk management advice, financial advice on behalf of LawCover through that. And you also present one of the principals workshops looking at it's all about the money, actually, all about the dollar. Can I just ask you to look at drawing on a couple of firms and your experiences going through one or two firms that you've visited to get your feedback on what you've observed and perhaps looking at the issues of financial management, financial stress?
Broadly, because I did this for a number of years, with all the analysis that one did prior to going in, there were often a couple of key messages that I used to hammer with the partners quite strongly in order to get the attitudinal changes that you need to get. What I used to find, and I used to hammer a lot, is the absolute need for financial planning. We talked about it early on, but I really used to stress this very much with them. Particularly, I used to ask them at the end of every financial year, do you prepare a basic budget? I'm not asking for something of complex, just simple stuff. Do you analyze what you did last year? Do you have a sense of, did you make any profit? Do you know which areas that you are profitable and those that aren't profitable? What are their billings and collections? Always was a big thing.
Yes.
That was the first key thing I found with the ones I used to go with, where I used to get the most input or most result by going through that. The next thing was, what I've always said is that no business is better than bad business. So in other words, what I mean by that is sometimes you just have to say no. Sometimes there are clients that you should not be taking. Sometimes there are clients you would love to take on but cannot take on because of the lack of resources that you have in that point in time. And if you take on the bad business, the amount of time and effort that you spend on that, instead of spending your time and effort on productive clients and other areas, and the energy levels and all of that, it just, over a period of time, it just takes the fun out of the practice. It sucks your energy out of you and all those things.
We hear that quite a bit with the solicitor saying, if only I didn't take that client on, I knew I shouldn't have. And it's easy in hindsight, but that gut feeling can be a very good flag as well.
Yeah. The other thing that I always say when I'm trying to get some improvement is I always try and pick the low-hanging fruit.
Yeah.
Okay, so what I'm talking about, that there's always things that you can get them to do where they get some success, which gives the encouragement to carry on. And what I'm generally talking about there, particularly because the cash flow was always so bad, this is not rocket science stuff. Go and have a look at their debtors. Why haven't you collected that? Why haven't you done that? Why haven't you billed that? And then really start to get them to focus on that, get some money coming in, and then we can start to talk about the investment in software and clients or whatever, software staff or whatever it might be. Part of that would then always lead on to which clients you've got now you should not really have.
Yeah.
What are we going to do about it? And get them also starting down the track of thinking about benchmarks. What I mean by that, their own internal targets,
Yeah.
something that can measure themselves going forward.
With that debtor problem, that I don't know, that psychological barrier or not going out to collect outstanding payments. What is that? Why do you think that's happening? The invoices may be late in being sent, but why aren't they being followed up promptly?
Because inherently, a lot of lawyers struggle with the business side
Yeah.
of running a practice.
Mm-hmm.
There may be other issues. In essence, they are not very good at it. They have a hard time eyeballing their clients.
Mm-hmm.
In those set of circumstances, when I assessed that they were not good at it, albeit I think they are the best people to chase, it's sometimes better to get somebody internal, like somebody who's not shy about asking. And that generally was the accountant, the bookkeeper, the general manager, etc.
Yes. Okay.
The worst thing they can do is allow those debtors to go beyond the 90, 180-day period, because broadly speaking, when that's the case, 80% of the time you're going to have to write off that amount.
Yes, indeed. Yes. And we often see the problem when the solicitor is then tempted to say, well, I can sue for those fees, and the problems that stem from commencing to sue a client for outstanding fees, it can backfire. The letter fired off to the Office of the Legal Service Commission alleging delay, lack of professional service, et cetera, overpricing, comes back to bite very hard. And there can be a claim made against the lawyer alleging some other type of problem as well with the matter. So what started off in chasing for outstanding fees becomes a defence to the Legal Service Commissioner or with a claim that's with law cover. The time, effort, emotion. We have had many solicitors say to us, I wish I didn't do that in the first place. So,
and what I normally say to the solicitors, I pick my moment, I say I'd rather spend my time on Bondi Beach than work for a client who's not going to pay me, who's likely to want to take me to court. I think, why spend their time and effort doing it? I would rather not have the business.
yeah, wise words, and otherwise go down the track of having the fees cost assessed, and that can be a far better way to do it as well. One of the firms I visited, I remember we actually recommended the partners gain some training in financial management, seek some advice there so they could get on board their accounts and understand it better, and particularly cash flow. It just seems to be an area where some practitioners do struggle with that importance of cash flow management and controlling debtor days. What about the importance of invoicing and invoicing promptly? What are your views on that?
I always believe that you invoice as soon as possible after the end of the matter, or some important event that might have occurred in that matter before the end. You bill as quickly or as soon as possible. The earlier of the end of a month or some event within that matter. The longer you delay, the less likely you are going to be paid. If you've had a great win with a client, obviously get the bill out the next day. Forget about the next client. Forget about anything else. You get your bill out. I think a lot of this is attitudinal. I think that lawyers struggle with the concept that they are a business person as well as a lawyer.
Right. Yes.
And I think they have this feeling that they've always got to get onto the next client matter because that client is expecting their advice, whatever. And I don't believe that. I believe that you look after yourself as well as looking after your clients. Because if I look after myself, I can better look after my clients. If I've got cash flow coming in, I'm going to be a much happier person, and therefore I'm going to be a much better lawyer.
Yeah. Yes. Yeah, right. The balance sheet, if we look at the firm's financial position at a point in time, which is the balance sheet, what are the things that you typically look for in the law firm's balance sheet that reveals the financial health of the firm or flags the lack of health and some risk management issues there?
Looking at a balance sheet, well, you always got to understand the nature of the practice that you're looking at, because sometimes the balance sheet will look different depending upon the nature of the the work that they're doing. If you've got a personal injury practice has a very large amount of work in progress, you look at other firms that might not have they'll have very few debtors because they should be billing, collecting almost simultaneously. Putting that all aside, to me, the key thing to look at a balance sheet is the level of debt, the level of liabilities and how that relates to the level of assets within that practice. It gives me a very strong indicator of whether that practice is solvent, whether that cash flow is good. If the particularly outside debt, bank debt, is high, it generally is going to indicate that they are living beyond their means.
Yeah.
So I always, when I went out to most practices, I look at the balance sheet before I look at the P&L because it helps me understand the P&L. But that's broadly what I'm looking for. I'm looking to see the level of debtors, how high it is. I'm looking to see unbilled disbursements because for the life of me, I just don't understand why they pay their clients costs.
Yes.
And my policy, when I talk to everybody, or my start point with reference to a policy with unbilled disbursements is they are the client's costs and we do not fund them at all.
Yeah.
So it gives me a sense when I look at the balance sheet, I'm looking for all of those sorts of things and it's helping me understand the way they've structured their practice.
And have you been to law firms where they haven't had the balance sheet and the P&Ls available?
No, you've always got them because they get paid by they get done by the tax accountant or the accountant at some point in time. What they might not do is have interim ones, on a monthly basis or quarterly basis. That generally wasn't the problem. The problem I found that often they were prepared, but they didn't look at them.
Yes.
And that again comes back to this thing that I am not a businessman, or I don't have the focus on my practice as a business. This is not all practices. Yeah. This is the bad ones, the ones that don't do this well.
Yes, because obviously there are a number who do it extremely well.
Yeah, of course.
Yeah. But with the claims and the claims-prone situation, we do see that correlation, So the management of the firm's working capital, if we look at the cash flow and lockup, we've touched on cash flow and its importance, and not all solicitors understand that principle of lockup and what it means. So do you want to just explain that a little bit?
I'm going to take it a step back because to understand lockup, you've got to understand the cash flow within a practice. You improve your cash flow when you improve the time it takes you from the time you start on a particular file, the time it takes from that point all the way through to when you ultimately get the money in your bank account. All right. The longer you take, obviously, the poorer your cash flow is going to be. I call that the timeline. And if you want to improve your cash flow, you've got to crunch that timeline. You've got to keep pushing from the one end and just pushing back all the time. And that gets right back to your billing policies, your policies about client disbursements. It's about how quickly you bill, and all those sort of things come together to give you an average number of days, if you do any sort of calculation, that's going to take you from the beginning to the end. The longer you take, the more money you're going to have tied up in your files. The biggest asset, in my opinion, particularly monetary asset in any practice, is the money that you have tied up in your files.
Yes.
And that's going to be the value of the time, the work in progress, whether you record it or not, and the amount of time or the amount of money, rather, that you got tied up in your debtors. And when you add up the work in progress and you add up the dollar value of the work in progress, the dollar value of your debtors, and the dollar value of your unbilled disbursements, that is lockup. It's just the language of saying you've got that amount of money locked up in your files.
Yeah.
And if you had somebody running an import distribution business having a warehouse worth of stock, I tell you right now, they manage that stock like you cannot believe. They want to get that stock out the door as quickly as possible. They don't want to have to write off any of that stock. Our stock is our file.
Yes.
But we just don't, well, the firms that have these problems just don't manage it as well. And that's what you've got to, that's the whole point of all of this, is trying to drum into everybody the understanding that every time you do not send out a bill, that money is now tied up in your files rather than being in your pocket or in your bank balance.
Yeah.
Okay.
Yeah. Very important points there. Looking at the profit and loss, and that reflects the results from the practice operations over its reporting period. When you're looking to review and improve profitability of practices, what do you see as the key issues for the solicitor to focus on?
Yeah, well, the first thing when I go in or when I look at a practice, I just want to work out if they made a profit.
Yes.
Okay, and it's what I call a real profit. What I do, and when I sit down with the partner or the owner of the law firm, I just say, do you make a profit? And they said, yes. And I said, define your profit for me. And broadly speaking, because it's been the standard for many years, they will say their profit is the profit available to me after I've paid all the expenses of my practice. I say to them, well, what about the money that you might have taken out? Some of them today, because they incorporated legal practices, take out some. Other in the old days, they used to take it out as drawing, so they didn't see it as some sort of salary for their time and effort and skill. For those who don't understand it, I say, fine, you say that's your profit. I would turn around and say to the solicitor, take into account the time and effort that you spend in this practice, the skill levels that you have, the training, the number of years that you've been working in the legal profession. What sort of value do you put on your time and effort with respect to your practice? How much, I mean, if you went out somewhere else and did exactly what you did, you weren't the partner you wanted to be paid, how much, put a value on that. And they generally do. Then I say, well, let's compare that value to what you defined as profit. And if the amount they defined as their value is greater than their profit, I say, well, you know, in real respect, you're just working for a salary.
Yep.
And probably not a very good salary. And if you are in a practice, if the solicitor's in a practice in its productive period, not at the wind up and not in the wind down period, in their productive period, I would say to them, if you can't really assess your worth, think about if you went to work in-house in a government department somewhere. How much do you think you're going to earn? Now, the midpoint in the range is probably going to be around about 110,000. Well, surely that's what, I mean, is a good way of assessing your profitability.
Yeah.
Now, having said that and saying to them, well, you're not even making a profit, now let's use that to go and see why you are not making a profit. And then we get into, do you have any sense of what parts of your practice are profitable?
Yes.
If you've got let's say, a conveyancing side to your practice and you've got a litigation side, do you know which side is generating the profits for you?
And do you often see that there's that clarity of understanding which of the legal service areas are profitable and which aren't?
In the smaller practices, not at all.
Yeah.
In the larger practices, yes.
Yes.
Okay.
Yeah.
And so they say to me, what do you do? I said, well, all we really got to do is take this profit and loss and sensibly just split it between the two practice areas, making reasonable assumptions where you don't have the data. And we'll pretty soon be able to work it out. And when we do the talks for law cover, I say to everybody, do it once a year. At least get a sense of where you're making money. If you're not making money in the area, why are you going to continue to practice in that area? If you've had clients that you've had problems with, why are you continuing to practice in that particular area?
Yes, one of the experiences I had was with a firm that had a very busy conveyancing area, and they were very busy, and the owner said that they brought on another conveyancer to help with the workload, and they were very pleased with that. And the question was, but is it profitable? And there was the stop and saying, well, what do you mean? We're extremely busy. Look at the revenues. We've increased our revenue, but not drilling down and looking at the profitability of that practice area. They had been reducing their fees for the work done there, and it was the other practice areas that was actually supporting the conveyancing arm of it.
Yeah.
So until you get that proper analysis, and it doesn't have to be rocket science analysis
Yeah.
either, does it?
No,
It can
not
be
at
quite
all.
simple. to look at where the value is and where some of the problems are.
Well, you don't feeding off what you just said there. I mean, you don't have to get rid of that area. Then you start to think, well, what do we need to do to make it more profitable? And broadly, in every practice I've seen in the last 25, 30 years I've been doing this work, the biggest improvements are always on the revenue and productivity side, not necessarily on the expense side. In a legal practice, you don't make more money by getting rid of staff.
No.
You make more money by making your staff more productive, making yourself more productive. And that's broadly the way I go about it. I start focusing on the bottom line and then try and drive the analysis wherever it might take us.
And looking at billable hours and fixed fees, some firms say, look, we have fixed fees with our work, so I don't know what the work in progress is. What's your answer to that?
Well, there's a number of things about fixed fees. I'm a proponent of fixed fees because I think clients like them, and I'm a user of legal services. When people come to me, I want to know what it costs me. When they talk about how do you know whether you're profitable or not, and the issue I would then say, if you are time recording in the litigation side of your practice, why don't you think about time recording in the fixed fee part of your practice to get a sense? However, even if you don't do that, that practice group analysis that we were talking about early on will tell you whether you are making the sort of profits that you think you are making. Because then you'll see in that fixed fee areas, let's call it the conveyancing, are we making the sort of profits we were hoping to make? And if you're not, I would suggest that it's to do with the level of your fees. My experience is it's always, not always, absolutely predominantly on the revenue side was where you have to make the changes.
Yes, okay. Yeah, very interesting work there. Anthony, moving to the area of due diligence, and we're looking through our claims analyses over the years, we know that a failure to conduct due diligence when acquiring files through sale or merger is a significant claims-prone area. Can I put to you, what should be considered by a solicitor when they're buying a new practice?
Okay. It's interesting you say that because a lot of the firms I went out to for law cover of the years who had bad claims history actually purchased the problem. And the biggest failure that I came across in this area was their failure actually to read law cover's policy document. Because the policy document deals with a really important clause, which is called the prior practice determination clause, which essentially allows law cover to make a determination whether you, when you purchase something, become the successor of the practice which you just acquired or merged with. And that has quite significant implications to your risk or your claims profile. Let's say, Malcolm, I come along and buy your practice. You're a bit of a rat bag. You haven't done the right things over the years. And you've seen me and you know that I like to purchase stuff, and you present everything to me in a lovely box, and I buy your practice in a manner that I'm seen to be the successor. All that claims history and all that you have, in essence, just gets taken out of your bucket and tipped into my bucket.
Yep.
All of a sudden, I now have a claims history that is really in the spotlight.
Right.
And what it does, it not only impacts this year, but also impacts the next 5 years because it stays around for that period of time. I must admit, a couple of times I went out to practices to go and speak to them who had this problem. And boy, when I came in, did I get a... They were waiting for law cover to come around at some stage, and I was seen as law cover, and they really gave it to me. Basically saying that, there are all sorts of things, how unconscionable it was, et cetera, and I always let them have the say, run the course. When they're finished, I used to say to them, by the way, did you ever read law cover's policy document? And they look at me like stunned mullets, you know. Mhm. And I say, well, if I was a client coming to your practice and I told you I signed a commercial contract and I didn't read it, what would you say?
Mm-hmm.
And that was the point. They never, ever read or fully understood the import of that. Now, to me, that is probably the first thing I would say to anybody who's thinking of buying a practice. Make sure you understand that practice's claims history, because it could have unintended consequences to you in terms of your premiums in the future.
Because you're really looking at the assets and the liabilities of
you
that
are.
practice.
And it's not only the liabilities that you see on the balance sheet, it's what's called the contingent liabilities, the abilities that are not recorded there. Mm-hmm. And so you start, to me, it's like I say, well, even when I've advised people in the years when they are buying, the first thing you want to get a handle on is their claims history. You want to get a good handle on the people that you're buying from. Do they have, any black marks on them at the Law Society, et cetera, et cetera?
So to get the claims history, the acquirer can ask the owner of the law firm to provide them with their claims history from law cover.
Yes.
And that can be one of the first steps.
Yes, 100%. And if they prevaricate or they don't provide it, as I used to say to everybody, it's time to take a bit of a walk.
Yeah. Yes, because the question would have to be, why aren't you?
Yeah,
Because
exactly.
just because you have a claims history also does not mean that that practice is in any way a disastrous practice. It can be that there were problems at a particular time. It depends on the scenarios and circumstances.
Of course it does. Yes, it does. But it does attaches a liability on you as the acquiring firm.
Yes.
It's the first step. That's all it is. There's a range of other stuff that if you're buying, you can go through. Law Cover has some good checklists. I'm not saying they're definitive, but they're a bloody good start.
Okay.
All right. And that'll get you going down the right track with the help of your accountants and everybody else that you might need to advise you in that regard.
Because on the website there's the basic due diligence checklist, which suggests, and that it is fundamental, and there are suggestions to consider. And one of that is the claims history. Another one may be to look at with understanding that you've got client agreement, to have a look at the firm's files and do a sample audit.
Yeah.
Because you want to see that the clients, for example, are similar to your existing clients. Fees match.
Yes.
That there's not a big disparity between the fees of the firm that you're about to acquire and also their cash flow as well, the management of the cash flow, and do they have clients that actually are good payers, so they're buying quality.
Yes.
And that's one thing to consider.
Every one of those things in Law Cover's checklist is really, when you put them all together, what they're trying to help the buyers determine is, when they buy somebody else's practice, how likely is it that they are going to sustain that practice going into the future? How likely is it that fee base will stay once they acquire and the solicitor who's departing is no longer around? How likely is it that the profitability will be sustained?
Yeah.
And that's the judgment call that a purchaser is making when they're looking at that is, can I buy it and incorporate it into mine and still sustain what I thought I bought? Okay.
Yeah. And from the flip side, this is what the law firm owner should be considering when selling a firm, that these are the questions that a prudent buyer will be asking.
Yes.
And some of the information that they will be expecting. And that's, to me, the importance of maintaining that good business plan and having that process throughout so it is able to be presented to a potential acquirer.
The big issue is that there's a lot of baby boomers, my age group out there, just turned 60, maybe, heading towards that time where they want to retire. And you're going to have if you're hoping to sell it, you need to have something that somebody's going to want to buy.
Yeah.
And they're going to want to buy it if they see it is sustainable. Okay.
Yep, no, good point. And that is part of the succession plan, and to start that earlier rather than later.
one would hope they started before they hit their 60s, yes.
Yeah, exactly right. Yes, okay. That's very good. And on our final topic, Anthony, I just want to ask you about the issue of billings, where we so often see a disconnect between the partner's billing rates and what is actually realised. It's the partner who says, my fees are $450 an hour, but when we look at the true billable hours and the fees charged, it actually is, in one case, I've seen where it's as low as $225 an hour. There's a huge disconnect between what is perceived to be the billing rate and what's actual. Why?
I think there are two or three main reasons. Firstly, why are they at 450? A lot of people will go and see a survey, and they will see that owners, partners in their particular area are charging the medium rate is 450, so I better be 450. Okay.
Yep.
The truth of it is, a lot of them don't have the confidence to sell their services at that rate. They are somewhat embarrassed to bill at that rate, and therefore, when it comes time to prepare the bill for the client and comparing the time and the number of hours they've spent times that billing rate, they just are not comfortable relative to the value, but they start off not being comfortable at the 450. Part of it is that they're not really organized well enough to be able to do that work in less hours so that the high billing rate doesn't convert into a amount of a bill that they are not comfortable with.
Right.
And what I've done over the years relative to the billing rate, when I've come across this and I say to people, why do you charge $450? You're obviously not comfortable. You're not getting anywhere near it. Why do you do it? And they give me the example. That's the median one I rate. I said, you should lower it. And they say, at what level do you think I should drop it to? Okay, I said, all right. I reckon you should charge yourself out at $200 an hour. The eyebrows go up. They say, oh, what? I say, oh, well, you're obviously confident to sell at that level. How about $225? And the eyebrows go up, but not as much. And you slowly inch it up to a point where you can tell from the body language and from their reaction, you're now hitting the level where you're about to tip over the edge. And generally speaking, I say to people, don't charge at $450 an hour. That's our example. Charge at $350 an hour, but bill and collect everything.
Yeah.
And have the confidence to do it. If you're going to be at $450, you probably have to invest a lot more effort, time in your work processes, your IT, and everything else to enable you to do it more efficiently.
Yeah.
And the one time when I was at a practice within the CBD here, I could prove to them that they would make more money by dropping their billing rate down by about $100, $125 per hour once they gave me the commitment that they were comfortable selling it.
And that's the discipline. And that's the critical part, that commitment, and then the confidence and backed up with that discipline of not writing off, not discounting, and sticking to their policy. And I think, that's wise words.
I said it early on, and I'll say it again now. It always comes back. It comes down to attitude. The people I've seen who make the best progress in this area have a bad circumstance. They write off a big sum of money, and then they vow to themselves they're never, ever, ever going to allow that to happen again.
Yes.
And once that you get that epiphany and you get that change in mindset, the light bulb goes on, and my gosh, it's amazing how quickly people can improve. It is not difficult. You just have to be, you got to have the guts, the desire, whatever it is, whatever the language is, to do it.
Yeah, thanks, Anthony. That's fabulous. And it certainly is challenging running a practice. It's a lot more challenging today than it was 20 years ago. That discipline, that understanding of the finances and applying good financial management processes we see as crucial, and try and encourage all solicitors to get on board with improving their financial management knowledge as well, because there's no doubt about it. We have the evidence with over 10 years of going out to law firms to see that one of the root causes contributing to claims arising is poor financial management. So, look, thank you so much for your time today. We really do appreciate it, Anthony. And just a reminder that Anthony does present on one of our workshops, which is all about the money. It's a half-day seminar. It covers this and more, and we strongly recommend solicitors to embrace it.
Thank you very much.
Thanks, Anthony.
Thanks.
Thanks for listening to Risk on Air by Law Cover. Join us for the next episode and subscribe to stay up to date.